Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about NNDM Limited, traded at Nasdaq, ticker name NNDM. It's nice to note that this stock was analyzed in December and it did behave as analyzed, as predicted, allowing to make really nice profit. You see the price action from December went all the way from the area of about 750 to almost 18, and now after this series of really beautiful growth that also started by end of September, October 2020, we see a major correction wave. Now looks like going to a consolidation volatility starting from mid of March. So if you look here, of course, this was very beautiful history of growth for this channel, having classical upwards trend and channel, and now we are actually having really the series of declines. Now it's a second wave going, and usually after the second wave of correction we can talk about possible major rebounds, or at least some kind of a consolidative activity, meaning that kind of formation of either a triangle or some other classical patterns. Because here what again you can see, we had two major channels of decline. So one was taking place from mid of February all the way to mid of March. Then we had beautiful rebounds, and now we're going actually next channel of decline. Currently sitting on top of it, we tried to pierce it through. Looks like didn't happen today, and it might be we will go down to this channel. By the way, at the bottom of this channel we now have moving average 200. This is very interesting because it will make it a double support, and to be more precise, it is even a triple support here, because if you look more carefully you can see there is another volatility level just sitting exactly here at 653. So overall this area now makes it, although not coinciding at one point, but a very strong triple support zone, which means that once the price is there, we might really start a very nice upwards move, and we could make really nice profit from this point onward. Therefore, all buying strategies will be focusing on this moment, focusing on buying on those levels and making profit from that on. Of other parameters still, before going really to looking how to buy here, which is important, we can see that free moving averages here, 20, 50 and 200, are behaving in such a way that moving average 20 started to decline from mid of February, of course also working as kind of a resist level. You see the price was not able to pierce through it, and now moving average 50 starts to follow as well. So it means that at certain moment a volatility could start between, and actually kind of waving around each other, could start between moving averages 20 and 50. This way the price will be really consolidating and volatiling in the range of again with this lower limit being 653 and the higher limit being about, let's say, in the area of you can say 1244, a little bit lower, 1205. So in this area, just on the area of current on the top of moving average 50. This zone is considered to be quite safe area of volatility before further major price action takes place. So if you buy at lower part of this zone in general as a midterm trader, and then you wait and sell the higher part of this zone, let's say of this corridor, you could be really good and really safe, easy play. But of course you need to take into account possible risks, and that's what we'll talk now about. So if you are more, let's say, short-term daily trader, you need just to catch the appropriate wave, and that's what we'll be discussing. So currently, how to buy here, as I said, the very strong support level is forming in the vicinity of 653, and then of course the higher part of it will be just here. It's the zone that is forming with this small support level that happened 2 days ago, which is in the area of 731. And with this actually being said, this will make for us a first buy opportunity where it will be advised to enter into this position. So let's write it here, which will be 653 to 7 31. So with this, you can enter first and hoping for major rebounds taking place from there. You could make a profit. And speaking of profit, I always keep repeating this. At our channel, we advise to take it, let's say, up to 10 to 15% for slowly moving charts. This one is really fastly moving and actually able to provide really reasonable profit. So here it would be advised to take a profit at 15 to 20%. And this is really a strong advice, because often what you see, people either keep it too long or let's say, and then it expires without taking profit, or other way around, they don't average down in time from lower part, and then they cannot take a maximum profit possible. So taking profit is really important, because once you take it, you can re-enter or check other opportunities, because before you sell, you don't have any profit, you have just a position. This is very important to remember. So with this being said, the stock in general is preparing for rebounds. What is also very significant here to note, that if you look for these two letter channels, you can see that the angle of the secondary channel is smaller. It's less sharp in comparison to the first declining channel, meaning that overall the bouncing becomes less sharp. We might still have another one before the major rebounds takes place. So it's also an indication of deceleration of decline, meaning that soon we might really have a nice opportunity here to grow, especially for midterm traders. For daily traders, the first level to enter would be just here, very nice. And then still what is possible, of course, this channel, the latter one, could be temporarily broken. Well, not really broken, but pierced, to be more precise. We might have a little bit severe piercing lower than moving average 200 here. Still possible within the technical volatility considerations. And of course, if this is going to happen, we just need to take at next support resist levels, which will be formed here clearly between the area of 5 and 593. So let's write it here as another call out for us. This will be between 5 and 593. So with this being said, it's a second technical level, a piercing level, where you can still enter. Although, as I always say, the most expected way of trading would be to rebound already from the first level, but still going to the third level is also possible. And as always, we do the third level to discuss would be the level where we want to mitigate possible risks due to negative catalysts. We always do it at our channel. It's part of our so-called triple analysis strategy, where we combine technical analysis. We also combine non-linear averaging down based on resist support levels. That's what we do here. And the third resist we usually keep for risk mitigation due to negative catalysts kicking in. And negative catalyst could come in any form. Simply speaking, it's just a bad news, but it could be also related to a global situation on the market, like remember the COVID declines, or COVID-based declines actually. So to take those into account, we also need to keep some funds for averaging down if happens. And here, the most principal level to enter would be obviously between 3 and 367. You could say, wow, it's so low. Like, why would you even speak about this? Well, it's not that we say the price will go to, it's not that we anticipate, but it's just risk mitigation. So if anything happens, you will be ready to buy there and still be able to exit with profit. This is very important difference from what you usually can find on purely, let's say, technical analysis, because what we do is we don't look only on technicality. The major problem for those who trade purely technical is they don't take into account news, so they cannot anticipate them, they cannot foresee them. No one actually can, and usually this is the risk they have when trading. But with this approach, we hope that you can have a very nice way to, let's say, still buy with a profit if any negativity enters, and then you could be just right in time to enter and exit still with a profit. Because while others will be taking losses without having any funds to, let's say, average down, let's write it here, you will be just in time, you will be safe, you will have funds to buy, to average down, and once the rebound takes place, if others in the best case will be just exiting with a draw, you will be exiting with a profit. Although, of course, and this we also need to accept, this way of trading takes a little bit longer time than usual, but it's time versus losing money. So that's what we choose for. That's what we, let's say, optimize for. With this being said, this is the third level to buy, and actually should be quite safe trade if you just, let's say, plan for these levels to buy and exit. Again, with a profit target of 15 to 20% for the money allocated in the position. Money allocated means that money for which you buy. So if you buy with certain portion, the certain channel, once you have there 15 to 20%, you can safely, let's say, exit taking profit. And asking yourself how to enter into the zones, it's still classical trade, so we don't see any extra risks here. So it's a 5-portion play, meaning that the funds you would like to, in general, play with NNDM, you can split in 5 portions. You can then buy with 1 portion in the first channel. Then you can use another 2 portions to slowly buy through the second channel. And if negative catalyst kicks in and you will have to buy again, instead of selling everything, you just buy through the third channel slowly with these 2 portions and then prepare yourself for a final rebound and profit taking. So that's it for NNDM at the moment. Very nice stock. Of course, very volatile, ups and downs are there. And that's always important to know what you do, to see the picture, to see the bigger picture, because then you will not be trapped into these declining waves and you will know how to exit those and still how to buy with the profit. So good luck with it and see you at another episode of Stocks Advisor channel.